And speaking of purpose, right? We actually are here with Jordan Lindsey for everybody to talk about building something incredible, and to be more specific, to building. It's about building and designing a winning strategy. So the markets, right? So switching a little bit from the more personal side of Jordan, let's actually appreciate and take a moment to hear what Jordan has to say as an extremely good and valuable professional in a field with so much of experience. So Jordan, I know you have prepared a little bit of presentation for us. Why don't we take another point basically to be discussed, right? Because we are here to discuss how the best strategies are built. How is it possible to build a good strategy for the modern trading conditions?
Yeah. So, and again, thank you for sharing that sincere, beautiful moment, Adrian, and having me up here. Yeah, I think one of the most important things that you hear early on in people's trading career, or those that are aspiring to become traders, is that, well, you need a trading plan. And I think one of the greatest mistakes made out there is that a lot of people, they just get right into it and start placing trades. And they're kind of like, well, this is my education, I'm learning, and all that's true. Everything you do does form a base of your education. But if people out there are telling you, well, listen, you need a plan in order to follow and trade, and you skip that critical piece, then you're really setting yourself up for failure, and you're probably going to develop a lot of bad habits, and you're taking that learning curve and you're extending it much further out. And you could be extending it out by years, and you likely might not even ever make it to profitability and turn into quarter profitability. You might have a couple of good trades that you put on. You might, take an account and run it up a little. You're probably going to wind up blowing it out. And so this is fundamental. You need to have a trading plan in place. So the next thing that I think that is important is committing to developing a trading plan. And if you here today were listening, and that's your one takeaway, that you're going to go ahead and commit yourself to, you know what, I'm going to actually devote some time each and every day to developing a plan, right? That's a good starting plate, and that's foundational. It's fundamental in the markets today. And then I think one of the next errors that a lot of people make is that when they try to put together a trading strategy, they're looking for like a very high win rate. They're not looking to be wrong, and what's attractive to them is not losing. So they look for strategies that might have something like an 80 or 90% win rate. And the truth is that unless you are running some high frequency trading algorithm that's front running client orders, your system's going to end up in failure. So you're not looking for what is attractive. You're looking for what works best. So you could go ahead and you could study past systems from other people that have worked well, and find out maybe what their win rate has been. It was Dr. Van Thorpe who said that a successful system has somewhere generally in the range of a 35 to 55% win rate. And what they do is they wound up cutting all of their losers very quickly and pushing their winners. So that's the next thing that a lot of people get wrong, is that they're very quick to take profit. They're actually cutting their winners short. It's like that instinct that like, I can't let this green turn into a loss, and they go ahead and they're very good at cutting their winners short. And then, as far as pushing your winners, a lot of people, a lot of new traders specifically, are really good at pushing their losers. They'll start maybe with a stop loss, and then like, it's going to hit my stop loss, and remove it. And then it goes deeper into negative territory. And then they hold on to it. And eventually one of those trades wipes out their account. And if you've experienced that, if you could kind of flip that on its head and invert that and see and understand, that's what pushing your winner is like. And guess what? It's only a fraction of your winners that you're able to push to the majority of your profits. So you have to kind of take your experience, what has worked and what hasn't worked, and then try to focus in on those things to be successful at anything, to perform at an elite level. It requires immense preparation, immense discipline, and a really, well, like you could picture an elite athlete and their work ethic. It takes that type of dedication. Don't think that you're going to go out there and compete in the capital markets, against some of these brightest minds in the world, and then be able to get lucky and continue that. So that's the base of, you need a trading plan. You have to really think about what that trading plan is, and then you have to begin putting the pieces together, focusing more on mindset, what you want to accomplish, how are you going to go about accomplishing that. Less time looking at the charts, less time taking trades is going to take you a lot further. Does any of that resonate with you?
Oh man, it does so much, and you know that well, right? So speaking of the win rate, I think that the sooner we accept things, the sooner we accept that it's impossible not to ever lose, right? The whole game changes basically. This is a game changer when you actually discover that that it's okay to lose, that it's okay, that it's normal, that it's impossible not to lose. The whole thing changes. It changes the perspective, doesn't it?
I think a lot of people, the reason that they don't want to lose or have a losing trade is because they don't have a plan in place. So basically, like, they spend all this time studying markets, becoming acquainted with maybe perhaps technical analysis. They really put a sincere effort into it, or what they believe is the effort required, because they have a love for this. They have a passion. They want to be successful. And when they put on a trade, therefore, they want to be right, because they put all this work in, their criteria aligned for what they're looking for. So now it's as if, like, this will prove that they are on the right path and putting everything they learned into action. But it's just another individual trade. If you know what your win rate is, if you're taking perhaps like trendline breakouts, and you're what you're, first of all, you're managing your risk, what you're risking on each trade, and you go into that trade, it's not a question of this one needs to be right because this is my setup and it's everything's taking place. It's like, well, I have a 50% win rate and this is just another trade. And, I assume that every trade I put on, or 5 out of 10 of them, is just going to get stopped out anyway. And then it becomes more, it's kind of like, they talk about casinos have the edge, the house edge. And it's because systematically they know over a given amount of time that they're going to come out ahead. And that's how you should be thinking about it as a trader. And I think that because most people don't have a plan, people say they have trouble sticking to a plan. Well, it's because they don't have an actual plan in place to stick to. And so rather it's, and that's also, I think this might sound a little maybe peculiar, but a lot of people might not have a plan because in a sense that prevents them from failure, or because they have nothing to commit to.
Yeah, I mean, we need those sorts of guidelines and rules in order to persist through this noise, right? Because there's so much uncertainty, there's so much unpredictability, that the nature of the future is basically that it's we cannot really grasp the full complexity of it, right? There's in real time there's so much of data that changes and reshuffles the whole thing, right? That without the rules that technical analysis can provide, right, in order to obey them strictly, day in, day out, regardless of the conditions, it's impossible to be profitable, because eventually it's like trying to win a lottery. And they're not trying to win the lottery once in a lifetime. It's trying to win a lottery day after day after day, again and again and again, right? So it's basically what you're saying, Jordan, so that it's impossible to basically remain profitable without those trading conditions and without the plan. So speaking of the plan, we know again that you have prepared this excellent presentation. So whenever you feel like sharing that, just feel free to let me know, and we're going to display this. Otherwise,
yeah, we could display my yeah, absolutely. I'll start actually on this slide over here, and only because before I even get into what our strategies are and what a successful trading strategy looks like, I just want to be very clear that, like, we were talking about our faith earlier on, and I understand how incredibly difficult markets are. Again, I've been involved in the markets 25 years, 20 years full time. And I have a lot of respect and humility for what they are and how difficult they are. And I work with a team, and it's this collective team that has developed these strategies. And I personally, understanding how incredibly difficult the markets are, I really do really I believe it's providence, and you'll see why I say that as we begin looking at these strategies. But look, I'm not. This is my team's work. You know, this is something that we all do together. And I'll start off on Bitcoin, and we'll look at Bitcoin and Ethereum briefly. So, you know, right now you're just looking at 3 different charts, and notice the first thing I want you to notice is that these are traded on the 8-hour time frame. The 8-hour time frame, the reason that we trade it is 2 reasons. It winds up being the most profitable time frame that we're able to find, as well as to manually trade it is something that everyone could do. There's 3 potential times a day where someone would need to have a signal where they are entering the market or exiting the market, unless, of course, at any point, 24 hours a day, a stop loss was hit, which is something that you don't need to be present for. Now, these are all mechanical systems, so anything could be coded, but a lot of people do not feel comfortable with automation. People know last year there were some API hacks and leaks, and people all over the world lost a lot of money. It's you know, automating is the easy part. The safety is a whole nother thing to get into. You're looking at 3 different charts of Bitcoin here, because this is the system that we first built. We've since have been able to move on, and I'll show you that. But I'll start with the first system that we were able to build, and this was launched in March of 2022. So it has a lot of time of forward testing involved in it. And I'm going to go ahead and I'm going to show you first. I'll show you what this first, I'll say, we call it CTM 2.0. And this is Bitcoin coming back to 2014. And you can see the drawdown, Adrian, first of all, is quite attractive at less than 20%. And look at the percent profitable. It's only 38%. And you can see the return over here is quite attractive. I'll come back and I'll show you what that looks like over here from just 2022, the bear market, to give you an idea of what that return looked like. Sorry.
That's okay. And very, very quickly, meanwhile, while Jordan is setting his up, that's okay. This is a kind of encouragement and invitation for everybody to go ahead and follow Jordan Lindsey on Twitter at Traders Mastery. You need to have Jordan on your list for everyday checks, because the quantity and the quality of the content that Jordan shares is incredible. Please go on.
Thank you, Adrian. I appreciate that. And so this is from 2022, the bear market through today, and you could see the return and how it outperforms. And look, so Adrian, this is what a successful system looks like. I want to just go back and show you one other thing that's really important over here. These are those last 2 years. I don't think anything is very special about the price action. And you could see that the average winning trade is 6.74%, and the average losing trade is 1.7%. So the risk to reward here is about 4 to 1. And people hear that like a successful system should have a 4 to 1, a 5 to 1, a 3 to 1 risk to reward ratio. But I think that the thing they miss is that they enter a trade and they maybe put like their stop loss in relation to a level that's 4 times less than their take profit. But that's not how it works. That's just the average trade. It's not any individual trade. You could see that, again, here, the percent profitable is only 36%, 35%. So what I'm trying to show you here from the very beginning is that percent profitable, a lot of people looking for very high percent profitable, that's not really what is necessary for a successful system. Then we moved on in this is very new, Adrian. And again, the development here just continues to grow at an exponential pace. And we were able to take that first design that we have, and then someone within the community was able to build a layer on top of it. And then the community itself was to go ahead and run with that design. And we now have 2 iterations that we look to trade Bitcoin here. This has only been forward tested now for for 3 months, a little over 3 months in the market, enough that just recently myself was comfortable enough to put capital behind it, as well as others in the community. And I just want you to see the difference here. This is also coming back to 2014, and look at that drawdown, 11.5%. And now look at the percent profitable. It's up to 46%. So, I mean, the improvements that we've been able to make here are pretty tremendous. I never thought that we would get to this potential level. When we first started out, to have a drawdown of 30% was quite attractive for returns that are considered, I would say, exceptional. And to reach a stage where the drawdown here now at this particular point in time has gotten so low it's very exciting. And you could just see the risk to reward. You can see now that the average losing trade is 1.83%, and the average winning trade here, it has increased a little bit further to 8.8%. So we do have two different systems for Bitcoin, and the reason being is because one of them has that lower drawdown. This other strategy over here, it has a higher return, but you can see the drawdown is a little higher at 16%. You can see the overall net profit here has doubled to $1.4 million. I personally prefer and execute off of the one with the lower return, even though it has lower profits. But that is something that people have to kind of discern for themselves what they're looking for and what they're looking to achieve in the markets. So at this particular point, does it bring up any questions, or should I continue?
I think we can roll on. You keep up great work so far.
Yeah. So I'm going to move over to Ethereum and take a look at what we're doing in Ethereum. The system started off over here with the first version that we had put together, and you can see the drawdown. This is from inception 2016 here to present, a 35% drawdown, and the returns on Ethereum have been much higher. The percent profitable here is very low at 29%. What we since have been able to build, you can see the drawdown is here is significantly better at 14%, has increased the profitability up to 42%. And you can see the returns here just get crazy. Let me just show you from a period that people are familiar with, and we could look at the last halving date, right? So I could start at 2020, the halving of Bitcoin, but just use that as a marker here. So I'll come to the 11th of May, and you could see, just to give you a little bit of context of what type of returns have been put together over here. And I'll just come out one more time, and then we could stop over here at halfway through 2021. So what the main takeaway that I want people to take from this is that, and the number of trades, Adrian, you're looking at only 50 trades since May of 2021, right? Roughly a 2.5-year period, only 49 trades. And I think that what this is illustrating here is that you really want to pick your spots. A lot of people, they'll take multiple trades a day. They're not really taking a trade for any other reason except that they want to be in the market, and they feel like to make money, they need to be in the market. And if you were to actually take that time and spend it developing something, a concrete plan of action, and then committing to really working that out, whether that is paper trading that, whether it is live trading it on account, and really writing down everything that's happening, tracking it, looking to make incremental improvements, because small incremental improvements, they really make big changes and add up, including like just taking that profitability up even a few percentage points makes a drastic difference in overall performance. So what I'm trying to do here is also show people here that all of these systems that you've looked at on Ethereum and Bitcoin have a percent profitable that's under 50%. And people are able to take a look at the overall return, the profit factor, and the max drawdown. and see, wait, maybe that's something that I want to emulate. Maybe what I'm going about this the wrong way. I'm actually should be focused on having something that when it enters the market, it's not that it has such a high percent profitability, but it's the right time to enter the market. And I'm doing it in a way that, you know what, I'm comfortable out of every 10 trades I take, taking 6 losers, and going into and approaching the markets with that type of attitude could help them go a lot further. So we have since continued, right? We've entered this like exponential growth phase. I'll show you a prototype that we're working with on Bitcoin and on Ethereum. These have not been forward tested at this point. These are only back tests. Now, some people wonder what's a good platform for back testing a system on data. TradingView was the platform that we work on. Obviously, they pull their data from multiple brokers, whether or not it's something like Binance or the CME or whatever exchange, ICE. Our concern was whether or not the back testing on TradingView was actually accurate or not. And what we did was use a different third-party system called Backtester to confirm that what's taking place on TradingView is actually accurate and correct. We were able to determine that it is. I feel really comfortable using TradingView, and I just wanted to, for those that are interested about whether or not the backtesting results are accurate on TradingView. We also include in all of these strategies a commission, and this is very important. We use a commission for both buy and sell, entry and exit of 0.1%. You could develop a strategy that's profitable without commission, right? And once you add in the commission, it could take that strategy to failure. So you want to make sure that you are including whatever your cost of business is when working on system development, and include that in your calculations. So we've again, this has only been forward tested in an environment here for going on 3 months. Since it is built off of our primary strategy, it's another layer on top of it. It only took those 3 months before I was comfortable putting capital behind it at the right time as well for a lot of people. You could see if I jump over, perhaps over to here, you could see this is trading that same strategy on Bitcoin, Cardano, Ethereum, and Solana. And Solana right now holding on to a very sizable position. You could see down in the bottom. This is the way I like to view the system. And this is essential here to share with everyone that's watching. So it's your P&L, your equity curve. And a lot of people look at something like this and they believe, well, the P&L is just up and to the right. And really, if I go ahead and I zoom out a little bit and I show you a little bit more data, like I'll come back to 2017, or just to give you could see that it just looks like it's up and to the right. But your expectation has to be a lot different, because it's not up and to the right. Actually, most of the time, these systems are running sideways in drawdown. And you can see here, even in 2023, from April until very recently, this system is running sideways in drawdown. A lot of people's expectations are that they want to be making profit day in and day out, or even week in and week out. And that's an erroneous mindset to come from. Most successful systems are like markets, for example, most of the time are consolidating 80% of the time and then expanding 20% of the time. It's similar with a strategy that you're employing in the markets. It's only, and if you go out and you start at the bottom, you can see, like, watch how this is moving up. The account balance is moving up and then moving sideways, moving up, moving sideways. It spends most of the time moving sideways in drawdown, then up and to the right. And if a lot of people are able to understand what a successful system looks like, then they have the potential to emulate one. If you're looking to not be wrong, to always be right, and to be making money day in and day out, week in and week out, well, that's not what a successful strategy looks like, which means that you're not going to be successful. This over here is a prototype that we're working on, and it's really inspiring for myself. When we first started working on Bitcoin, and to have like, well, we never dreamed that we would make it up to let's say 1,000,000% return on Bitcoin. Again, this is all without any type of leverage to it. This is a potential prototype that we're working on. It's, again, it hasn't even begun to be forward testing yet. It's adding a lot more variables on top of our systems that we already have. So we're not sure how it's going to work in a real world environment. But I just want to show you the potential that's out there. That's actually a 20 million percent return with a less than a 16% drawdown, and the percent profitable over here is almost reaching 50%. And a similar situation occurring here on Ethereum. Again, this is all just highly experimental. The team has just begun putting it together, working on it. We're happy with what we have in place, which we consider to be foundational, but it's that drive that I've had in the markets for the past 25 years. We all share it. Each one of us is looking to conquer the markets, and it's not like you just get satisfied. So you're always looking to push yourself further. And the more we continue, like each and every day, just to gain a little bit of knowledge and then collectively put it together, it's like exponential growth in action. And here you can see on Ethereum, 2016 to present, a drawdown of less than 18%, percent profitable 44%, and then the returns just become mind-boggling. Let me show you what that looks like just in a 2-year period. We'll go from 2021 until today. I don't think there's anything special about the price action that's occurred. And you could see, I mean, just tremendous. Again, the percent profitable staying the same. If you look at what the average winning trade and the average losing trade is, it's almost a 10-to-1 risk to reward. That doesn't mean that every winner you take is going to have a 10-to-1 risk reward. It means every time you enter the market, the average is going to be a 10-to-1 risk to reward. So those are just a little bit of inspiration of, first of all, what could be done in the markets. A lot of people are let's say, well, inspiration is really good to see the potential, what's possible, how you could get there. And then as you grab your cup of coffee and you get in front of your charts, maybe just starting over a little bit different and say, you know what? I'm actually not going to be trading for a moment. I'm actually going to work on developing a trading plan, right? And then there's a lot of work after you do develop that trading plan, and it becomes primarily psychological, on discipline, on execution. So it's almost as if, like, as a trader and on your journey as a trader, you have a lot of different phases. There's that introductory phase where you become immersed in the markets and you know that you have a love for this and you really want to learn to do this, and you believe in yourself and you believe that you have the potential to be successful. And then there comes the time where, you know what, you've learned a lot of what it takes to potentially even turn the corner to profitability. And now you need to take it a step further. You need to become very organized. You need to develop that strategy. You need to have a plan that you could work off of. You know, do I have the data to show me what's working and what's not, so I can make small incremental improvements? Sometimes working on your greatest weaknesses is going to lead to your furthest advances. So, for example, if you know that that for some reason you're unable to stick to your stop losses, well, focusing all your time and attention on that and getting yourself into a place where you're looking at, why am I not honoring my stop losses? What's the fundamental reason behind that? Is it because, and probably what it's going to come back to is because you don't have a well-developed edge in the markets. So it doesn't really matter whether or not you're sticking to that stop loss or not. Point being, if you're able to figure out what your greatest weakness is, in this example, not honoring a stop loss, overcoming that so that you always are then honoring that stop loss, you just made an incremental improvement on what your greatest weakness is. And that is going to have an overall net gain on everything else you're doing, because now you can move on to the next. All right, what do I need to work on next? And so on and so forth.
That makes a lot of sense. So if I may, right, because we were talking about, well, building the strategies, and that seems like a good, chapter of some trend following combinations, right? That again just lower the win rate and still kind of like expose yourself to bigger profits eventually from those tails that tend to last, right? You get chopped in the sideways, which is something that I do basically as well, right? So when some people ask me what I do for a living, I say I lose money for a living, because that's the reality, right? I lose 70% of the time. Still the remaining 30% of the time, that the actual winning trades, are outperforming the losers. And there were the tests even that you can, it's fine to have an even 10% win rate, and it's still possible to have such an aggressive, exposure to those massive tails that is literally going to make you profitable, which is pretty cool. All right. And if I were to ask you, Jordan, like, what is the one parameter for the systems that you typically focus on the most to optimize it?
Oof, the one parameter. So let's go back to trend following system. And we talked about just earlier that generally speaking, markets are consolidating 80% of the time and expanding 20%. So if you're employing a trend following system, most of the time as price is consolidating, you're probably taking not false signals that are not going on to fall into profit, right? So most of the time you're losing money, and whether or not it's a 70% loss rate or an 80% loss rate, it's during that consolidation. So then the other 20% of when the markets are trending, that's when you're capturing gains, and you're capturing enough gains to make up for those losses. So one of the things that I think that's very important is, for example, this strategy is more of a momentum based strategy. So which is very similar to a trend following system. Because if you think about it, when an asset starts trending, it actually has momentum. So what I always considered myself to be a trend trader, but really one of the major advancements was actually then looking for momentum. So a lot of times you're taught as a trader, or as I understood as a trader, is like, you don't buy into resistance, or you don't sell into support. A lot of the time, the system is actually doing both of those things, which is completely contrary to traders' instinct, because that's when momentum is actually beginning to rise. So I think that portion of the system where it's non-trending, if you're able to develop any type of filter to keep you out of those trades of when a market is not trending, you're going to make a momentum leap forward. You could take a system that has, for example, a profitability of 30%, and by increasing that to 35%, your overall profitability and drawdown are each going to increase tremendously. That's very important. When you talk about as far as parameters that we're looking at, so it's mainly two, and the first one is trend or momentum. So how are you defining that trend or that momentum, right? And then number two was the filter that you're going to use for when markets are consolidating. And there's other ways to go about it potentially. For example, as you look at when these prices are going sideways and during this area, and if I'm able to go ahead and what we did over our previous system, which I don't have that one pulled up, but the drawdowns were bigger. So by us as price is moving sideways, able to keep the drawdown lesser, when you do go on to the next expansion, the profits then increase instead of having to make back that profit. But if you're able to potentially, with a trend-based system, to have an adverse system, maybe like a mean reversion system that you're running together, so that during these periods of sideways, it's going to go ahead and keep your P&L more level, reduce that drawdown. That might be something to focus in on. But Adrian, I think that the two most important things to focus on within the system is the trend and or momentum, that they're similar things. how are you defining that? And that's something that probably took the first year or 6 months, our primary effort and focus. And then it was also how are you filtering out the noise within that trend, and working on reducing the drawdown and therefore increasing the profitability, which increases the overall profits. Those are the two main factors to focus in and work on.
I love it. I love it. I'll take it as a great answer.
One other thing that I want to add is that because this is a trend following system or momentum capturing system, there's no take profits here. So the trades, I have no expectation when I get into the trade other than where my stop loss is. The market, when you can see over here on this particular entry that is just coming off of recently, as the market flattened over here, that the trade exited. Like the momentum waned and the trade got out. Because I don't know which are going to be the trades that actually fall further into profit. Ethereum's a lot different. And Ethereum's a lot different where it gives back a lot more of its gains. I just want to show you over here so people get comfortable. So you could see, I'll just come back to, this trade was up 353% into profit, and it only took 150% of profit. So as a trend following trader, the only way you could hold on to your winners is by feeling very comfortable with giving it that room for those winners to run. And in some extreme cases, like the one I'm showing you, you could give back a substantial amount of profit. But you have to understand the system you're trading in order to be comfortable doing that. You can't be in a trade. Look at this trade over here. It's given back significant profit. It was 30% into profit just last week and has since come back down. Now only holding 20% in profit. But that's normal, and you have to really understand the characteristics of the system you're trading.
I love it so much. Just a quick one, right? Have you ever considered, or what's your take on combining the hybrid systems as in trend following or momentum plus range mean reversion when the market chops?
Yeah. So that's kind of just the doors that have been open recently. So first of all, I don't want to, again, the incredible massive effort from everyone on the team, whether it's people on the dev team, the summit team, which do the advanced design, or the core itself, everyone that's been through us throughout this whole process. And we've had people come up into all three areas. The amount of effort and work that goes into this system design is intense. And so again, originally it had a lot to do with defining what that trend is, what that momentum is, and spending a massive amount of effort trying to fine tune that. And it's true, Bitcoin, Ethereum, stocks, they all have their own unique iteration or settings. It's not one size fits all. You could take this Bitcoin strategy and place it on various altcoins and it'll be profitable, but each one has their own unique characteristics to it. So we had to find out what all those were. Then it became looking at and working on the filters, and then adding on for the new iteration, a new filter on top of that. And now recently, Adrian, it has become, listen, what is the best complement to this? I've always thought that it was going to be a complementary system, whether or not it's a mean reversion system, whether or not it's like a hedge. For example, in this long trade over here, we talked about on Ethereum giving back 10% over here. So as you're in a trade, and only the times you're in the trade, maybe you're looking on a smaller time frame for when that train starts heading the other way, and on a smaller time frame, having something that is hedging this or shorting in those particular areas to capture profit. Maybe it is a mean reversion system, so that, for example, in this particular area here, instead of taking small losses, small gains, I would have been capturing a little bit more profit And as the market breaks out, I expect to lose a little on the mean reversion system, but capture more here. I don't know that, or for myself, that's not a defined answer yet. That is more or less now along the lines of the next phase of exploration that we will head into. And that is you begin by building a system. And then what we did was added another system on top of that is complementary. And now now we could add a different system that is completely separate. So you can look at it as another layer, two systems trading together and trying to find a way. Most people are looking to increase profit, but in a sense, I'm just looking to reduce drawdown periods by that complementary system. Does that all make sense? Is that helpful?
It does. It does. I'm finding it very helpful myself, actually, right? So you shared so many of those excellent examples, for Bitcoin, for other altcoins as well, Ethereum, Cardano, Solana, right? And getting closer to the wrap of the session, I'd love if you could, Jordan, take a minute or two and comment on what's the number one takeaway for anyone who's just getting started in designing the systems.
Adrian, I think it's probably surround yourself by talent. Find yourself people that are willing to work with you, and that's likely not myself, right? That wherever that is, and why I say it's not myself is we consider this to be highly valuable intellectual property. So someone joining our team, why they can have access to the strategies, they're not going to have any type of access whatsoever to what's happening. But there are other people and environments out there where people are really trying to figure this out. You could find people that really seem to be dedicated in their pursuit, and you'll gain a wealth of knowledge. I think that my biggest piece of advice would be to stop focusing on trading and spend a lot more time on actually focus on developing a real plan, a real strategy in the markets, focusing a lot more on that mindset of what it takes to actually perform on an elite level. And that means that it's a lot more of that work ethic, that discipline. Are you forget watching the markets, forget participating in them by trading, which you're likely just wasting time, and spend a lot more time on developing the person that you want to be. Pretend that you are actually envision you're actually that trader that you want to become and on what level that you want to reach. And then ask yourself, what do you need to do to get there? That would be my advice for someone starting out. So I think that's a little bit different than a lot of people who might offer, for example, just open up an account and begin trading. I think that will just wind up creating and fostering a lot of bad habits. And, instead of taking that harder road, that more difficult road, and you're taking the one that looks attractive and easy. But that's why I think they say 95% of traders fail. And I think that's probably a very realistic statistic. So unless you're willing to work really hard for this, you're likely not to make it. And that should be inspiring. I'm trying to, those that are listening, I'm trying to get you to really do what it takes to be successful at this. I'm trying to show you that you can do this. You could have extremely highly advanced and profitable systems in the markets, but you don't get that without putting the work in.
That's a beautiful closure to today's session, ladies and gentlemen. Discipline, regimes, trading systems, trading strategies, CPM, and our today's VIP guest, Jordan Lindsey, my good friend, trader, investor, entrepreneur, systems architect, veteran algo trader, technology lover, husband, father, and a child of God, and somebody privately that I truly respect and enjoy talking to, has been our guest. Thank you so much, Jordan, for finding time and coming over to our show.
Thank you for having me, Adrian. I really appreciate it. God bless.
God bless everybody. Thank you so much. Thank you for your patience, everybody, with the background noises. It wasn't at these levels when we're studying. So at times it just happens, unlucky. Thanks so much for tuning in. Make sure that if you haven't, stop missing out actually on the last days and hours of our free trading congress and claim your access. You've got a code at the bottom of the screen for actually getting a free ticket, free seat, and it expires just in a couple of days. So feel free to come in, get your seat up there, and make sure you follow Jordan Lindsey, again, Traders Mastery on Twitter, as that has been an excellent session. Thank you so much again. Mad respect to you, my friend.
Same here. God bless you.